Good day, guys. You're welcome. This is financial accounting, and the topic before us today is revenue expenditure and capital expenditure. All right. We want to look at how revenue expenditure and capital expenditure are treated in the books of accounts. How do we recognize them, and how are they treated in the books of accounts, especially the final account of a business organization. All right, now let's come forward. Now, what is expenditure? Expenditure are amounts spent by a business organization in order to derive a particular purpose, to derive a particular benefit. An amount spent towards a purpose to derive a particular benefit. Any amount incurred by a business organization to generate income or to achieve a particular benefit is called what? Expenditure. So we can classify expenditure to revenue expenditure and capital expenditure. Revenue expenditure can also be called recurrent expenditure. What are revenue expenditure? Revenue expenditure are expenditure incurred by a business organization in which the benefit will last for a particular year. Any expenditure of a business organization, all right, towards a particular benefit which will last for a particular year or within a year, such expenditure is regarded as what? A revenue expenditure. A revenue expenditure is usually shown in the income statement of a business organization. And the income statement, you should know, is the profit or loss statement of profit or loss account. So revenue expenditure which reflects in the income statement of a business organization. And revenue expenditure involves payment of salaries, because the payment of salaries, the benefit of paying salaries elapsed within a year or months. Repairs of assets used in production of goods and services, servicing of assets used in production of goods and services. Such are examples of what we call recurrent expenditure or revenue expenditure. Let's now move to capital expenditure. Capital expenditure are expenditure of a business organization on tangible assets. All right, expenditure of a business organization in which the benefits will last for a long period of time. The benefits of such expenditure will last for so many years. All right, that's what we call what? Capital expenditure. As capital expenditure is shown in the statement of financial position of a business organization. Note, revenue expenditure is shown in income statements. Capital expenditure is shown in statement of financial position of a business organization. All right, because capital expenditure will last for a long time. Expenditure on tangible assets, expenditure on non-current assets, expenditure such as construction of road, building of schools, all right, drilling of boreholes, all right, building of hospitals, all right. All these are examples of what? Of capital expenditure, because the benefits of a capital expenditure will last for a long period of time. Recurrent or revenue expenditure, the benefit is within a year. That's why it appears in the income statement. Please note, we have some other things. When we talk about capital expenditure, capital expenditure could also be expenditure on what we call intangible assets. Not only tangible, it could be on intangible assets as well, such as your goodwill, your patents. All right, they are also part of what? Capital expenditure, because the benefits last for longer period of time. Now, please note, how do we determine capital expenditure? Cost price of the item of expenditure. If you buy an item of assets, what is the cost price? How much will it take to put that asset into its position to function well? Alteration, improvement cost. If you want to improve it, it will be added. We have incidental cost of freight, cost of moving from the seller's place to the buyer's place, it will be added. Installation cost, cost of fixing it to make it work functional, it will be added to the capital expenditure. Any legal fees incurred during the process of acquiring such assets, it will be added to the capital expenditure. Then if an organization is building the asset itself, all right, the material cost in production, the labor cost, the overhead cost charge, it will be added to the cost of the asset, and the finance cost. All these will make up the capital expenditure. So with this, we should be able to differentiate between capital expenditure and revenue expenditure. I have a short question here. Alright, based on what we've learned just now, we can provide answers to this. Look at this. The following data relate to Babatunde Ventures, which engages in internet printing and designing business. Alright, number one, we have purchase of 6 new computers at 20,000 each for 110,000. There's a net discount. Purchase of cables for cabling the computers, networking 6,000. Installation charges 8,000. Acquisition of software for the computers 38,000. Purchase of 2 printers at 15,000 naira each. Computer consumables 7,500. Computer servicing, which is 3,500. You are required. What is the amount of capital expenditure to be found in the statement of financial position? All right. Then the other one, what is the amount of revenue expenditure chargeable to income statement of chargeable to the statement of comprehensive income? So we shall give solution to all this based on this understanding. Just a minute. Alright, now let's look at how to solve. Now, the first one, hey, we are preparing account for Babatunde Ventures. Babatunde Ventures. Okay, so A, we are told to, let's calculate our total capital expenditure. Okay, so what will be the first? Let's look at the first one. Purchase of 6 new computers. You can see that means the cost of the computer purchased. So computer, purchase of computer, all right, so 110,000. So they've deducted discount already. Purchase of cables for cabling the computer network. Don't forget that aside the cost, what is the cost of installation? Without the cables, if you buy a computer system, the CPU, the monitor, all right, the keyboard, all right, the UPS, uninterrupted power supply, all right, you need cables to make it work, and those cables will become part of the cost of that. After fixing the computer system, you keep the cables will form part of what makes you to enjoy the asset for a longer period of time. So it will form cost of this. So we had it, purchase of cables. And the value is 6,000, because the cable will make the computer last long and you keep enjoying the benefit for a long period of time. Number 2, installation charges, cost of installation, because without this installation you cannot fix it into installation. Installation charges, we have 8,000. The next, acquisition of software. A computer system is made up of hardware and software. Without the software, you cannot have a computer system. Without hardware, you cannot have a computer system. So the software will function. So it will be added. Acquisition of software. Next, purchase of 2 printers at 15,000 each. 2 printers. Without the printer, you cannot see the hard copy of what you are doing with the computer system. So it makes up. So acquisition, purchase of printer, purchase of 2 printers, which is 2 times 15,000, because they are 15,000 each. So we have 30,000. So computer consumables. Computer consumables are not important. Alright, servicing of computer, they can be done at a regular interval. So here we can get the total value of our capital expenditure. Let's look at B. Let's get the total value of our capital expenditure. So we have 110,000 plus 6,000 plus 8,000 plus 38,000 plus 30,000. 192. So we have 192,000 as our total capital expenditure. Then let's look at our total revenue expenditure. Like this. So the first thing we have here is computer consumables. Consumables is 7,500, followed by computer servicing. Computer servicing is 3,500. So what we have here is 11,000. So this is the total of our cap. So this one is going to our statement of financial position. While this one is going to our what? Our income statement. So with this, we should be able to differentiate between capital expenditure and revenue expenditure. Thank you very much.